Hello my friends, this is the video that I made on natural gas prices 5 days ago, and my main assumption was that to confirm the movement to the downside we should break several ranges of support, and we shouldn't break this 1.618 extension level at $35.70 mark. If it breaks it, we have to invalidate this ABC correction, and we have to count this movement to the upside as a new uptrend. And here's the actual price action. We had this movement to the downside, and by the way, we have quite significant volatility during this week. And this movement to the downside ended with this quite bullish candle. It is a hammer, which indicate that we might have a next leg to the upside. And with this breakout, that was confirmed by a huge volume, the highest volume that we have basically for the entire several months. We can confirm that ABC correction is invalidated and we are in some kind of motive wave to the upside. And guys, probably I am the only YouTuber who admits not only the gains but also losses, and you can be a part of this fair community by joining the Patreon. Join my Patreon with the Discord access for only $35 a month. You will be able to drastically enhance your trading skills. And in my opinion, it is quite fair deal if you add to the equation the fact that for the first 100 subscribers, I will do a giveaway. I will do a technical analysis on any asset based on your demand. So just join it and you will be profitable over time.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
Let's start with the chart itself. I have to say that we don't need this channel anymore because we had a perfect breakout above the range of resistance. And this scale, this Fib extension tool, showed us the crucial point at 1.618. If I pull this tool from the bottom of this price action to the top, and my main assumption was that we had this as A wave. This was the B wave, and potentially we had to have this as the highest point of the C wave. And with this breakout, we invalidated this structure because 1.618 is nothing else than the extension of the third wave. And potentially we completed the entire structure to the upside, and for now, we are forming the retracement to the second wave. And everything I will show you in just several minutes. And for now, let's continue with the fundamental news. So, let's take a look first of all on tradingeconomics.com, and here you can see this. US natural gas futures rebounded 5% toward $3.2 MMBTU, nearing the highest in 8 weeks after EIA reported a bigger than expected storage draw. Government data showed US utilities pulled 140 billion cubic feet of natural gas from storage last week, more than market expectations of a 119 BCF decrease. Nevertheless, gas in storage remains 11.6% above the seasonal norm. Forecasts indicate extremely cold weather next week, which will drive demand to a record high. This extreme cold may cause a drop in production due to freezing oil and gas infrastructure. Meteorologists project a shift in US weather to colder than normal from January 13 to January 22, followed by a return to warmer temperatures on January 23 or January 24. And guys, let me show you another catalyst that potentially might drive the price of natural gas higher. Let me show you this news. We are on Yahoo Finance, and if you click right here on crude oil price, you can see that despite the negative performance on the entire market, we have quite a significant bounce of the crude oil prices. And why it happened? Let me show you this. Let me read just several titles. Oil prices tick up after Iran seizes Iraqi oil vessel. Oil's Red Sea panic point could get tighter after US airstrikes. Oil prices rise 2% after US-Britain strikes in Yemen. And we know that last night US Air Force and Britain strikes the Yemen forces in the Red Sea, and definitely this action might be a huge catalyst for the oil prices. And we know that the oil prices is the driver for the natural gas prices as well. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, let me show you that potentially for now we have this structure. We had, this is our first wave, this is our second, this is the third one, this is the fourth, and this is the fifth wave. And if it is the case, we completed the entire structure, and let me remind you that 5 waves on a smaller scale, it is nothing else than 1 wave on a bigger scale. And to confirm this theory, let me show you that the extension in the third wave compared to first one most likely should land somewhere at 1.618 level. And we confirmed it. Then we had a reaction, and let me pull another tool, and basically the same tool, but from the different points of control. If I pull this tool from the bottom of the third wave to the top of the third wave and to the bottom of the retracement, we can project the most probable level of the extension in the fifth wave compared to the length of the third one. And it is 0.786, and we hit it and had a very good reaction. And guys, for now, if my assumption is correct, we have to see the retracement, and usually, and you already know it, that retracement should have a shape of a simple zigzag, and if it is the bottom of our A wave, we have to land somewhere higher, probably it might be already the top of our B wave. Then we have to land lower to complete this wave, and if it is the real case, we have to pull the Fibonacci retracement tool from the entire bottom of this wave to the top, and here is the most probable ranges. As you can see, everything is in line with the crucial levels. We hit 0.5 with the first movement to the downside. Then, as you can see, this tiny 0.5 is the top of the B wave, where the older shorters entered their position. And for now, we have the golden pocket range, which is the confluence with the round number of $30, and potentially we might have this range as the range of support from which we might have a bounce. On top of that, guys, if I pull the Fib extension tool from this top to this bottom and project from the top of this wave, we have another confluence of around $30 at 0.786 Fib level, and the next level, which might be the range of support, is about $28. Let's put it this way. But for now, the first range is definitely $30, and wait for this movement if you want to accumulate to your long position. And guys, I highly suggest you not to trade the retracement weights, because we cannot confirm and we cannot predict its structure. We might have even more complicated structure in this retracement, and in this case, it is very difficult to assume its potential movement. So, let's delete unnecessary tools. I don't need this one anymore. I don't need this one as well. And the main tool that is important for us for the upcoming several days is this one. And if it is the case, I will do another update within the next several days, and I will show you what should we expect next from the technical standpoint. So, I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gon' live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life, I'm crazy, I'm mad.